Welcome back, everyone, to Vox Markets. My name is Paul Hill. I'm delighted again to be able to speak to CEO James Hickman and CFO Judy Happe of Finseta, a leading Forex and international payments platform serving high net worth individuals and small, medium-sized businesses. So welcome, guys.
Thank you, Paul.
Thanks, Paul. Good morning.
Yeah, well, big congrats on this morning's record first half results and positive outlook with sales increasing 40% year on year to 5.1 million and with EBITDA coming in at 0.8 million. But before we sort of run through the details there, James, I don't suppose you could just quickly remind the audience of what exactly the company does, its sort of key USPs and the sort of secular growth drivers underpinning the business.
Yeah, absolutely. Well, I thought you did a very good introduction. But ultimately, Finseta is a payments provider specifically focused on international payments and currency exchange. We offer account-based services to both businesses and, importantly, high net worth individuals. We're regulated in the UK as an electronic money institution. We're also regulated in Canada as a money service business. So we have two regulations to date. Part of our USP is very much around how we market ourselves and our customer acquisition, and that's through a growing introducer network. And an introducer to us is a solicitor, a lawyer, an accountant, a property agents, and such like. And ultimately, we get those introducers. We look after their customers, and a key part of our offering is the service aspect of it, and making sure that we're offering a very, very high level of service to both businesses and individuals. And that's one of the reasons that customers come to us, and that's why we're recommended by our introducers.
Yeah, and I guess the retention rate is pretty good for these guys. If they have a good experience the first time, then they come back.
Yeah, absolutely. I mean, it's vital for us to make sure that we are providing the underlying client a very good service, because ultimately, you know, if we're not doing that, then those introducers that are recommending them aren't going to refer the business. So it's absolutely vital that we maintain a very, very high level of service.
Yeah, and then just in terms of the sort of the secular growth for the business, I mean, with sales going up 40%, the market as a whole is set to sort of increase at around about 5-6%, according to Juniper Research. So you're clearly winning market share there. Where are you taking it from there, James?
Typically, it's traditional, you know, high street banks, etc. You know, more traditional methods, and the reason for that is businesses like Finseta have digitized. For example, our onboarding and client take-on times are far faster than you would expect from a traditional method. Our payment times are far quicker. Plus, also, and possibly most importantly, the value that we add is significantly higher than a traditional banking partner, a banking provider.
Great. Okay, good. Well, let's switch to the financials there, Judy. I suppose you could take us through the sort of key numbers. I saw an increase in gross margins, obviously strong cash flow as well. But can you just take us through?
Yeah, absolutely. Thanks, Paul. I'll do just a bit of a walkthrough of the income statement, if that's okay.
Yeah. So
as you've already said, revenue of 5.1, up 40% year over year. That's been driven by both an increase in active customers. That's up 9% to 952. But moreover, it's an increase in the transaction size, 29% year on year, really reflecting that high touch service offering that we've talked about before, meaning we're increasing our average customer revenue. I did want to draw out that away from that top line growth number, we've got a kind of underlying revenue growth of 54%. That's excluding the white label business that we fully offboarded at the end of 2023. So I think that's a really important metric to draw out on top of what is a very impressive headline growth. I think 54% really just sets us apart even further. We've seen growth across all of our revenue lines, most pronounced, I would say, in UK sales team, which has really gone great guns in the first half, really driving out that introducer-led business. And to your earlier point, we've gone deeper with some of our introducers that we'd kind of seeded earlier on As we've proven to deliver good service, we've seen an increased number of referrals, as well as adding net new. The solutions team, that's still fairly early in its kind of life, but want to draw out the huge kind of opportunity we see there. H1 was its first full period. We've seen good strides in the first half, but we've added a more headcount there in the second half, really looking to capitalize on the strong demand that we see. And just you mentioned gross margin, but I think that's a really kind of transitional statistic. So 65.7 for the first half versus 61 for the same period last year. That's really predominantly driven by the exit of the white label businesses, which was a real drag on that number, even though we had, managed out a large proportion of that business over the kind of prior 2 years. I would say that we are kind of, in terms of looking to the future, we expect that to be more around the 64-65%. In the second half, it will increase as we just increase that mix of introducer-led business in terms of the overall revenue mix.
Yeah. And
sorry. Sorry, go ahead.
And what about the sort of the productivity of the sales guys? Because I know you've recruited a lot of people. But now, presumably, they're trained up. They'll be generating greater revenue per head, I imagine.
That's exactly right. Yeah, and obviously we manage them to key metrics in terms of where we expect them over a life cycle to be. And our UK sales head in particular is excellent at doing that, and that's what we'll look to replicate as we geographically expand. With the Canadian team in particular, it's something we're looking to build in the second half and early into 2025. So yeah, that's all about driving people to metrics, pipeline, building their customer base incrementally, exponentially as they progress through their tenure with us.
And another part, I guess, of your deeper relationship is the sort of the average transaction value increasing. So you've got a number of levers which is driving that. Yeah,
absolutely. I think a lot of that is client-based driven. We've really seen the kind of that transition really over the last year or so. We are getting customers who higher transaction value, and I think that lends its our high touch service, our service offering lends itself to that. Moving on to profitability, I think that the key obviously is managing those investments into both sales headcount and geographical expansion and product delivery expansion. And I think I think that's a real kind of really strong point from our results from our first half. We have continued to invest and gear ourselves up for the future whilst maintaining and improving our profitability. So EBITDA, you already mentioned 0.8 million for the first half, up from 0.2 in the prior year. And the margin 16%, up from 5%. We saw a modest increase in costs, so up 24% year over year, mostly in headcount, both in direct sales and also in the card program, where we're looking to launch in H2 of this year. We also saw a bit of incremental spend in sales and marketing to support our rebrand to Finseta, which has been greatly received. So I would say that those targeted areas have inevitably caused a bit of a drag on our overall margin, but we're really set up well for the future, building out economies of scale and efficiencies to continue to drive that bottom line.
Yeah, I would certainly agree in terms of just building that infrastructure so it is scalable. And just on that one then, James, in terms of sort of like the future sort of commercialization or continued commercialization and overseas strategy, do you want to walk us through sort of like what you're seeing at the coalface in terms of Canada and the new products with the cards and anything else you have in your back pocket there?
Yeah, absolutely. So start with Canada. We made very good progress subsequent to actually being granted a license there. We've recruited a country manager who's an extremely able individual. We're well advanced with banking talks, and critically actually, and part of the strategy for the geographical side of the expansion is not only just to have sort of sales ability, but it's very much about local payments and local regulation. That's very, very important, creating value in the business there. So that's very much progressing and on track. Within the card program, we're very, very pleased with progress, and as Judy touched on, we're on track again. I've mentioned late September, early October launch. We're very comfortable with that. I'm actually been testing our cards already, so really nice to see that and see the product being built out and come to fruition. Really excited about that. We've also got Dubai as well. And that in terms of the regulatory side of things there, will definitely be on the roadmap in H2 2024, so in the next couple of few months. And then beyond that, I've stated that 2025 will be looking at other jurisdictions as well, which we are currently mapping out. One thing, as Judy touched on, we're very conscious of cost and make sure that the business is grown in a sustainable fashion. So part of my job is to make sure that the company is making money. We're not burning money, and I'm very conscious that we do all of our growth efforts in a focused, sustainable way.
Yeah. So you're basically investing in sort of regulatory compliance and all the essentials you need to have that scalable platform.
Exactly, and we're investing in areas that we know that we can drive revenue relatively quickly. So we're not investing for jam tomorrow. We're investing for jam today.
Yeah. And have you got any other products coming in? You've obviously got the cards and you've got the solutions you're building out. Anything else on the sort of mass payments, or are you already doing them? I don't know.
Funnily enough, we do have mass payments now.
Well done.
Yes. Ultimately, most of our product, I think I've said before, Paul, most of our product is very much, all of our product is payments related. So we're sticking to our knitting about, our core business. So product enhancement and product development is very much around how many countries, how many currencies we can service, the different types of payment rails, etc. So mass payments, for example, is just a variation on making a lot of payments, just very simply, and we're very much focused on that. One of the key things we've done over the last 6 months is increase the number of currencies we can service from 58 to over 140. So a significant increase, and that's really adding to our the Finseta Global Payments Network through relationships of specialist providers. We're not precious. I think, again, I've said this before, we don't expect to build everything in-house and do everything ourselves. It would take us forever. It would be hugely expensive. So we're very happy to partner with best of breed to make sure that we enhance our end product for our customer.
Right. Okay, good. That makes it sound sensible. Now, just in turning into the rest of the year there, Judy, in terms of the the H2 outlook and the full year, etc. I mean, I don't know whether you saw a bit of volatility at all in the yen carry trade in August, but how are you seeing the rest of the year sort of pan out?
Yeah, I think a couple of things to mention. As you'll be aware, we actually do very little in terms of forward revenue. We're mostly a spot business, 95%. Spot in the first half, so you may think very little contracted revenue. We've got that said, as you would expect, we've got very good visibility using our kind of internal CRM systems, and in particular getting that level down beneath the introducer into that kind of more detailed short-term pipeline. So we're feeling very confident for 2024. I think the analyst consensus has it at 11.5 million. That would infer a second half of 6.4 versus 5.1. And all of the developments you've heard about really from James and I, mean that we're very confident in delivering that. And from there, reporting, continued significant growth beyond that. A couple of things I wanted to mention, just kind of flagging for the future, if you like, or for the second half. I already mentioned that the margin, may come down a little, but I think the other point I wanted to mention is in terms of investment in our technology. So we have a very good cash conversion, EBITDA to operating cash, both 0.8 million. We had a little bit of a working capital outflow, 0.3 in the first half, which we'll expect to reverse by the year end. That kind of always happens in H1. But the thing I wanted to flag is we've had to supplement. We have a very small kind of internal development team. We have supplemented that in the second half. So you'll see the analyst consensus again has us at for the year 1 million in capex, and that's, as I say, because we've utilised an external resource to supplement our internal team to deliver some of those really important tech developments. On top of that, I would say not just capex, but in terms of operating spend, we're kind of agnostic in terms of buy versus build. Everything is kind of assessed on that basis. We're not precious about building it in-house, as James already said. We license best of breed technology, and a key kind of thing that we're just implementing now is around kind of machine learning, real-time transaction monitoring tool, and as well as the investments into the onboarding, enhancing the onboarding journey, means that we're really future-proofing our business. One of the key pillars of our strategy, future-proofing the business, meaning we can drive out economies of scale from that compliance team as we scale globally, and that's a theme really across the business.
Yeah, you'll certainly see the benefits of that going forward. Hopefully, then propel the business even further in next year and ahead. And that's a good way to like just move then, James, in terms of the sort of key messages that over the next 2 to 3 years, how you sort of see the business and what you really sort of how you want to shape it, etc. If we're doing an exit of around about 11.5 at the end of this year, then obviously you've got pretty ambitious plans.
We have. I mean, I will let our erstwhile analysts sort of produce the forecast numbers, but in terms of strategy, we are very clear as a business, as a board, myself, on the direction of travel. We have very clear strategic measures. We know what we want to achieve. Geographical definitely being one of them. All of which, as I say before, is got to be done sustainably. Product wise, we continue to develop our products, and obviously the card launch is just will be one of many products that we do launch, to have a very holistic payments offering to ultimately appeal to as many customers as possible. That's very much over the next sort of 2 to 3 years what we'll be building. Expect more certainly on the geographical side. I'm firmly a believer that in terms of geographical locations, that will help drive our business and drive revenue, particularly as we're servicing more and more introducers, and those introducers are global of nature, and therefore we find ourselves in a good position in that we're not having to cold sell, as it were. We're having warm leads into multiple jurisdictions with the same introducers. So in terms of driving revenue, that is a very, very efficient way of doing it.
And presumably, actually, as interest rates come down around the world, that's going to sort of like catalyze, you'd have thought, quite a few sort of high net worth individuals and businesses to sort of invest and move their funds around the world, because it's a bit of a drag when you put the interest rates up, but equally you get the benefits when they come down.
100%, and sort of geopolitical situations as well, as we're seeing in the UK. I couldn't help but notice over the weekend, a lot of high net worth planning to move overseas from the UK. Likewise, this happens globally all the time. So I feel like we are and we will be even better placed to attract those customers and to benefit from those moves.
Brilliant. Okay, well, that's a good optimistic note to finish on. So thanks very much, guys. Really strong first half results, and very much looking forward in hearing how the business develops over the next sort of like 6 months or so.
Thank you, Paul.
Perfect. Thanks, Paul.